Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a beautiful, fantastic day today. By the end of this video, you guys are going to learn exactly how to grow a small trading account, whether you're day trading, swing trading, or maybe just having fun. We're going to be looking at strategies, the approach, the mindset, the psychology that everybody needs to have when going into trading, trying to grow that $100, $200 account to $1,000, $2,000. So I hope you guys all enjoy it. If you do, smash that like button, subscribe. And guys, if you guys want to learn more about trading, check out our school where we help you build your strategy, find opportunity, build those scanners. It's absolutely fantastic, and you guys can use code LEARN to get 20% off. Only 2 spots left for that code, so sign up. I'll see you guys in there. It's absolutely fantastic. And guys, we do have a sponsor, and here's our sponsor. I know a lot of you are just getting started with investing, and one app that I've been using is called Moomoo. It's super beginner friendly, but still gives you pro level tools like live market data, easy to read charts, and news all in one place. And the best part, new users can get up to 60 free stocks when you open up an account with qualifying deposit. And honestly, that's actually why I tried it. And I've been using it ever since. Check out the link down below if you guys are curious. Yeah, it's Moomoo. They're absolutely fantastic. So make sure you guys sign up. They're the broker we're going to be using today. I've been using them for years and they're just absolutely fantastic. But let's jump into this. The first thing I want to kind of talk about is setting those expectations, right? Everybody loves to open that Robinhood account and they fund it with $100 or $200 and they expect to turn that $100 into $1,000, $2,000 in 30 days. No, you're not. You're not going to do that. It's going to be very, 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 very difficult to do that. But what you got to focus on is percentage growth, not dollar growth. Those are hugely different. The reason why is because, we've heard the statistics, right, of trading. And here's another one for you. If you guys make 3% per month, guess what? You're in the top 5% of all traders in the entire world. So with $100, yeah, making $3 in a month, you're going to go, oh my God, I got to be trading different stocks. But I hate to say it, but you're on the right path. You're on the right path. And this is why so many traders fail, is because the barrier to entry is so low, because you can open up an account and start trading today. And because they don't realize that statistic. I hate to say it. So, it takes time. It takes time to grow it because, now you got to realize, okay, now I have $103. Now let's try to make 3% this month. So now you grow it and you start this compounding effect where the profit you make today can be used as leverage tomorrow. It grows very, very, very fast. Another reason why traders fail and how to grow that small account is you got to have good risk management. You should always be risking $1 to make $2. We'll talk about how I do it and the approach that I have. So stay tuned for that. And we'll talk about breakouts. So let's talk about here and look at one of our trades. So this right here is a trade that we took on Tesla. For me, there's a lot of different types of day trading strategies, right? There's momentum trading where you have those scanners and you see a stock that gets a lot of buying pressure, start squeezing out, getting unusual volume, and you got to have those expensive scanners. Or what I do is I just try to become a master of 5 stocks, right? And starting out, do 2 stocks, do stock in an ETF. For me, I trade Tesla, SPY, QQQ, Apple, and NVIDIA. That's it. And the reason why is because if I can be a master in those 5 stocks, and obviously they're going to change. If a stock is overvalued and it's not one of those, yeah, I'm going to short it. If a stock's undervalued, yeah, I'm going to buy it. That's the approach. But I also want to show you that you can have good strategies with stocks here. So looking at Tesla here, Tesla was on this general downward trend, right? This is pre-market and we saw this general trend line, right? Trend lines is just where a stock has natural tendencies of getting a lot of selling pressure or buying pressure. So you can look at this and it hits it. We have sell off, hits it, sell off, sell off, sell off. Now, yes, I could have shorted this stock, betting for the stock to go down in price, but we also could have seen a breakout where it breaks out of the trend. So I decided to just sit on the sidelines. That's very important. If you're unsure and you don't want to chase a stock and all that stuff, take a step back and just watch, right? And that's exactly what I did, right? I started seeing the stock start forming just this general trend line, right? Where it was hitting, this trend here, and it was just getting a lot of sell off. So what I did is I said, okay, if the stock can push above this trend, we could have a new trend line here. So the stock pushed up and started forming this trend, right? You can see the push and the breakout of this old trend. Okay. And we also use an indicator called the MACD indicator. You can see where this orange line breaks up right through that blue line. This is what we call a MACD crossover, right? Where we have it breaking up. This is a very, very bullish thing for the stock to do. So this represents a very, very good entry opportunity. And that's exactly what we did. We also looked at another indicator called the MACD. The MACD here was trading for about a 22, right? Which last time it was trading for a 22 during the market hours was back in about here. And what happened? We saw good buying pressure, good couple of moves. So that's exactly what we wanted. Now, going about good risk management, this was the approach that I had, right? We have that trend, right? As you guys can see. So that's the target price for it to push back up to that trend line. So here's what I did. I got my long position tool that Moomoo offers. We had that entry point. I kept my stop loss, so the max amount of money I'm willing to lose on this trade just below it at about a little under 1%, right? For a possible push back up to that trend. That was a 4.5 risk versus reward. So, this is why trading is so incredibly important here, is because if you're just starting out with that $100 account, right? Maybe you find a stock like this once a week, not even every day, risking that 1% with a 4-to-1 risk versus reward, which we have. And your win loss is 40%, meaning you actually lose 60% of the trades you take, which is very common. Now, looking at this, after the course of a year, your account's at $176. So now, that following year, if you don't put in any money, maybe from your normal, 9 to 5 job, right? Let's redo this. So we have, 167 with 52 trades, risking that same 1%, 4-to-1 risk and reward. But maybe this next year, our win-loss percentage is at 55%. You got a little better. Now you're at $413. So now you go 413. This is year 3. Okay, now you're at $1,000. Okay, year 4, your $1,000 turned into $2,400. Year 5, and this is without putting any money into it. So within 5 years, you've grown a $100 account to about $6,000, which is astonishing. And this is why traders fail, is because they don't realize that it takes a long time. With a $100 account, it takes years. But if you start with $2,500 after you've shown the success of growing that small account, that's where you can grow it, right? So guys, this is a simple strategy, a simple approach, and simple indicators. And you can see another strategy here is just a textbook support, right? Where a stock has a bunch of tendencies of getting buying pressure, and textbook resistance, where we just have a ton of tendencies of getting selling pressure. Buy at the support, sell at the resistance. And look at this, the win-loss percentage. Let's go ahead and show you. Keeping our stop just below the support. Target up here. 5-to-1 risk and reward, right? There's opportunity everywhere. And that's what's very, very, very important with trading. And another thing I want to talk about when it comes with trading, don't expect to be in a position every single day. Don't. And this is what's going to help you starting out, is don't overtrade. I had this huge issue when I made that transition of, quitting my 9 to 5 and start trading every day. and start trading, I felt like I had to be in a position. I felt like I had to try to pay my bills, right? And what I realized is I was trading sloppy. I wasn't choosing quality over quantity. And the last thing I want to talk about is emotions. Emotions are very high with trading. So, what's a way that you can get around it? Make a checklist. A checklist is a set list of criteria that no matter what, you follow to a T. If a stock doesn't follow it, you don't trade it. If a stock follows it, you trade it. It's as easy as that. It'll help you and it'll help avoid over trading. And it'll help you get it'll help you not trade stocks out of FOMO, fear, all the emotions that you'll face with trading. So, guys, I hope you guys all enjoyed today's video. If you did, smash that like button, subscribe. We'll see you guys in the next one. Hope you guys all enjoyed it. Like, follow, subscribe, and don't forget to sign up with Moomoo and check out our school. Peace.